traders, Greg here with the market update. Trump is officially back and has had his first day in office. One of the things that the market was certainly expecting with Trump being back is that he would bring back volatility. And on day one, Trump certainly brought back volatility. So the biggest policy that the market has been worried about and focused about the whole time with Trump has been obviously his tariff policies and exactly how that would play out. Now, going into the inauguration last night, just before it happened, the Wall Street Journal actually came out with an article and basically said that there would be no tariffs on day one, and that Trump's team would conduct, country reviews and trade deficit reviews, before they actually, initiated, the tariff policy. So the market, when it read those headlines, certainly loved hearing that, and we saw a very decent sell-off in the US dollar on the back of that. So we saw Aussie much higher, we saw dollar China much lower, we saw dollar yen much lower. Literally everything, euro much higher. So anything is the US dollar, was pretty much bought up. And the market, because certainly, something we've been talking about a lot during these market updates is, this huge US dollar spike and move over the last couple of months. And it's been trending exceptionally well. And the market is very long dollars. So we saw a retrace on the back of, this Wall Street Journal article. Then going into the inauguration, in his inauguration speech, yes, Trump did mention tariffs, but certainly nothing, he didn't say anything aggressive about tariffs, and certainly he did not mention anything about tariffs on day one. So again, the market breathed a sigh of relief on the back of this, that we were getting through day one in a positive way with respect to a policy that everyone was worried about. But then we also had Trump then signing 100 executive orders post the actual inauguration. So the market was on edge again, waiting to see how this would play out. And once again, Trump finished signing all those executive orders, and not one of those executive orders was to do with tariffs. So once again, market breathed a sigh of relief, and we saw continued US dollar selling. Equities were positive, and the mood on his first day was certainly playing out very positive in Asia. But then out of nowhere, we suddenly got headlines that, Trump said, I think I will put 25% tariffs on both Canada and Mexico on February the 1st. As soon as those headlines hit, the market blew up in the space of seconds. So we saw all of that US dollar selling unwind in seconds. Dollar yen spiked up, over 150 points. Aussie was smashed lower. Dollar China back up. Euro back lower below 104. Saw big moves in the currency space. Equity markets, we saw Nasdaq down a few hundred points, the S&P down almost 70 points, and the market certainly saw massive volatility on the back of this one headline. But okay, when the dust settled, we did learn a little bit more. We learned that also with Europe, that they may actually not see any tariffs, and actually may get through all of this if Europe actually comes in and buys a lot of the US's oil and gas to improve the trade deficit. So big positive for Europe. We also learned that there was no imminent tariffs for China, that his team was looking at doing a trade study, something that may last until April before imposing anything. But certainly, the aggressive basically tariffs the market was potentially looking at of 60% for China isn't happening imminently or anytime soon. So when the dust settled on all of this, yes, we did see some massive volatility on the back of the initial headlines, but it looks as if at the moment, Trump's tariffs will be focused just on his immediate neighbors, Canada and Mexico, and the rest of the world will wait. And on the back of that, the market is now, looking at, on day one, we haven't seen the tariff policy may not be as aggressive as what first feared. So we did see the equity market certainly close positive in the end on day one, which was good. And also we did see the market, the DXY, US dollar, lower closing on the day. So I'd imagine those themes will probably continue to play out in the short term. Look, we did see some volatility in other markets, notably also crypto. Bitcoin did go up and trade new record highs just before his inauguration, went up to 109,000. Trump did not mention crypto once in his inauguration speech. No mention of crypto or Bitcoin. Strategic reserve, and nothing in the executive orders that were signed. So we did see volatility. Bitcoin lower, did go on test down towards 100,000 before obviously the dip buys came back in, and we're seeing Bitcoin close around that 105.6 level. So look, the crypto space is certainly still trading bullish, that this administration is still going to be positive for crypto, even though there was no news of any Bitcoin strategic reserve in Trump's day one. The other market that I suppose is worth mentioning is gold. Gold in the last month has performed exceptionally well. Yesterday put on another $40. We're closing around the 27.40 level. So it doesn't matter what the headlines have been. It doesn't matter whether the US dollar's up, down, yields are up or down. Gold has just gone one way, and that is north. Look, there's probably there's always a few things that drive markets. And at the moment, with what's happening with gold, I guess there's one of the things is central bank buying. After 6 months of not buying gold, there were reports end of last year that China started buying gold again in November. Earlier this month, we found out that yes, China was still buying gold in December, and they actually doubled their purchases in December than what they had done in November. So look, central bank buying is obviously, and China buying is a big part of this. The second thing is that there are obviously concerns about debt. Obviously, US has got record debt, and that is still growing. And also that we found out that US has recently reached its debt ceiling again, and that's one of the things that has also been driving bond yields a lot higher. So look, the way gold's trending at the moment, obvious targets are record highs, and as we just stated, regardless of what the conditions are, whether or not we've seen bond yields higher or US dollar buying, gold has just defied all of that and continued trending. So yes, I would strongly advise to stay long gold at the moment, and for those record high targets. Now, there's no real risk events coming up in the market at the moment, no real big economic data the market's got to worry about. The only thing that is coming up this week, and we've mentioned this on our Monday update, and that is the Bank of Japan. The BOJ meets on Friday. Market is expecting that they will raise rates by 25 basis points. One of the things that could have stopped the Bank of Japan is if Trump went aggressive on basically the tariff policies on day one, and whether or not we saw a lot of negative market volatility. But we've seen the opposite of that, and we've seen markets trading on a bullish bias at the moment, positive bias. So that certainly gives the Bank of Japan a green light to raise rates on Friday. So definitely expect that to happen. So on the back of that, you'd imagine that dollar yen should trade lower. At the moment, we're trading around that 155.5 level. Obviously, sellers are sitting above that 156 level. So yes, bias is to sell any rallies before we get to Friday, and look for obviously a break below, a decisive break below 155. Potentially maybe down towards 153. Or even lower, depending on exactly how hawkish that hike is by the Bank of Japan on Friday. Okay, good luck with your trading, and we'll check back in with you shortly.